All right, hey there. Good morning, everybody. Chris Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on what is today, Friday the 16th of October 2020. San Antonio, Texas. Great to have y'all checking in with me. Haven't seen y'all since Monday. Well, those of you that aren't in Discord, of course. Who's here already? Omar, what's going on? Sean's here. LG is here. Data. Something worth doing is worth doing early, huh? I hear that. And Evolution, what's going on, man? Good to see you guys checking in. As always, if you haven't joined us yet, you're missing out. You can join us over here at howtotradetowin.com. We'd absolutely love to have you with us. You can go over here, go to our page here, and scroll on down. We've got a link, as you can see right here. That'll take you to a section of Discord where our members just got to put their thoughts and whatnot in there about us and our community and the other members and whatnot. So check it out. I mean, I can sit here and tell you all day that what we do is great. It is. I'm telling you, it is. But, many times it's easier to believe people that are sitting there paying month after month, right? So come see why they do it. Yeah, what's going on? Candle Shepherd, hello there. Suckle-a-mink checking in. Enrique. Yes, okay, I did get your name right there, man. I'm thinking I'm seeing things now. Hey there, Brian. Good to see you, too. Brian said this 10,000 level feels like the 6,000 level that consolidated for months before it dumped. Should get interesting, right? Greg, what's going on, man? So anyway, yeah, join us over here at howtotradetowin.com, guys. We'd love to have you with us. By the way, if you are not with us yet, make sure you're following me, whether it's on Twitter or whether you're in the free side of Discord or something like that. Following us on, Instagram or wherever else. We may be doing something pretty darn special pretty quick here. And, if you're not paying attention, you're going to miss out. It's going to be very limited time. It's going to be first come, first served. And it's going to be none of this, I just found out or something because I wasn't paying attention. So make sure you guys are following us, all right? Let's go ahead and jump on over here where we are. Here we are. Let's see. So Bitcoin, what's going on with Bitcoin? This is what we've got here. We talked about from up here yesterday and everything with Discord. We talked about the drop coming down. It did through last night, bounced back up this morning. I believe we've got a 1, 2, 3, 4 here. We need to see a decline below this swing low right here, which is 11,215 and 51 cents here on Coinbase. We need to see a decline below that to kind of say, okay, yeah, it's probably there. The funny thing is that wave 5 minimum target is right there at 11,188. Now, I mean, if you zoom in low enough, 5-minute frames or 3-minute time frames or something, I'm sure you can get 5 down here. But, zooming out to the 15-minute, 1 hour or whatever, you've got 3. So we're kind of going with that. At this point, let me see here. At this point, coming off the highs up here, it looks like with this move here, we've probably got a leading diagonal here. So 1, 2, 3, 4, 5, which then gives us the ABC up here for 2. Hit my 4-hour supply structure EQ right there at the 78.6 retracement. Rejected off that again. 1, 2, 3, 4. Looking for that 5th wave. Now here's some thoughts about that 5th wave. If we look here, we're kind of sitting right here at these swing lows. So you had this one over here back on the 12th of October. You had this one over here from yesterday. You had this one that's kind of close here from this morning. And so if we're getting down there again, that should pretty much collapse that and fall through. And so the importance of that is, well, as you can see, this 61.8 extension here that we usually look for wave 5 sits right here at that low level, right there at that swing low. So if there's an increased sell-off going through that, it's possible we might see a move down here to the pivot, to the 1 and 4 hour pivot right here at about 11,133. And beyond that through this to this high volume node right here, which is at the EQ of this demand structure at 11,066. So if it doesn't bounce right here, I would look for that pivot or this lower one right here to get that bounce. Overall, that gives us then this 1 coming down here. And then a 2 on the pullback. And that 2 most likely should find resistance at this high volume node right here, about 11,390, 11,400, right in that area. Now, if it continues up through there, you would look at the EQ here of this supply structure at 11,500. But really, that kind of area should be all the pullback. That if this is 1-2 heading down, again, initial target right here around 11,390, 11,400. And the secondary target up here at this EQ at about 11,500. It shouldn't go any higher than one of those areas there. And then we should continue that down here. Right now, if we measure out wave 1 here, this first wave, then that gives us a minimum wave 3 target right here at this demand structure EQ, just below the, right here on the bottom side of this high volume node, at around 10,880. Now, obviously, depending on how this plays out here, especially if you get a strong overextension or something, this wave 3 could go lower. But for right now, that's at least the target based on that right there. So that's what I'm kind of watching as we continue to look at it here. One thing you can definitely notice here, let's get everything else out of the way. Again, look right here. From the low here, price made these higher highs and higher lows. But look what happened to OBV. Lower lows and lower highs. So it isn't simply that OBV went up as well but just didn't confirm it. OBV went in the opposite direction. Volume, smart money volume went in the opposite direction. And so what does that tell you? That tells you that your smart money, your bigger players, your professionals are selling into that retail buying. As a generalization, there's still going to be smart money that, that's buying there and retail that's selling. But just in general, as far as groups go, that smart money group is generally net short. They're selling versus retail, which is trying to become net long on that move. And so, again, that should be a clue that price is likely to head below this swing low right here because price tends to follow volume. So watching that, again, other ways to look at it. We talked about this before. We moved in sideways here between the pivot and the R1. We didn't bounce off the pivot. We stopped before that went up here, rejected the R1. We should at least test the pivot. Most often, that's what happens in these particular cases. So again, nothing surprising here. Nothing that, if you're surprised by all this, join us at howtotradetowin.com. I'd love to explain to you how all this works again and again and again until you're tired of hearing it. And finally, it just becomes second nature. But again, same things I talk about all the time. Here it is playing out. So we just need to lose this swing low right here. We just need to lose that support right there. And it does appear to be doing so. Again, from this high up here, you've got a high, you've got a low, you've got a higher or a lower high, you've got a lower low, potentially a lower high here, which should lead to lower low. So, off this October 12th, what is this, about 4 days or so, we've got this downtrend going on. Excuse me. Let's see here. Data says, oh gosh, he's got a lot of stuff here. Let me see here. He says, in case of a bounce at 11,188, that's this swing low right here, right? Yeah. Okay, in case of a bounce there, your 1, 2, 3 to 4 and 5 could end up being a WXY and further movement up, and C being even more subdivided in case it goes over the R1 at 11,735. So a retest of the pivot could make 5 look like Z. So we basically have confirmation after breaking below the pivot. Yeah, I mean, I think, it's getting really kind of complicated in that. But yeah, I think you're about right. This could be all corrective here. Sure. Usually what you're looking for is a decline below this swing low. So if you go on a count here and this is a 3 and this is a 4 and this is a 5, then breaking back down below this 4, if you've got 5 up here, would indicate that this should most likely be done. Now, if you have just a 1, 2, and this is a 3, a 3, 4, 5, which just becomes a 1, 2, 3, 4, 5, you can do that. Sure. But if you've got 5 waves going up here, which we appear to have, then, a decline below this swing low here, this wave 4 of the lesser degree, the decline below that, the previous wave 4 there, would then indicate that this is complete, that you couldn't go up there. So in other words, the only way you can go up further when you decline below this is if this is not 5 waves up right here. If this is 5 waves up, though, then when you decline below that swing low, you shouldn't be going up. That should be the top. So, yeah. Let me see here. What else do we got going on here? If we check out the 4-hour, again, Stochc RSI, made this big move up and then big move back down into oversold here. RSI didn't move a whole lot, just went up a little bit and then back down to lower low. So we've still got this downtrend in RSI going on. So, again, there's nothing changed on that. So overall, should still kind of expect price to head down. Let me see. Daily. If we look at daily here, we had a TD9 back here on the 13th. So 3 days ago. And it's at resistance. Again, as I mentioned, this was the EQ of the supply structure here. And so wave 8 hit that and pulled back, and wave 9 is just below it. So you're getting a TD9 sell at resistance. And so whereas a TD9 just basically means a pause, at least, potential reversal, you got to get confirmation of the reversal. But as with any other indicator or way of looking at it, when you can find confluence for your reasoning, then, it makes it more likely. So in this case, again, you're getting that TD9 sell signal at resistance, which increases the odds that a reversal is going to happen there rather than just a pause and a slight pullback. Still no guarantees, though, but, that's the way you read that when you're looking at it. We've got this hidden bearish divergence here. So coming off this swing high way up here to this swing high over here, clearly lower highs in price, but higher highs on the oscillator here on the RSI. So we should be looking to come down. Stochc RSI, of course, topped out and oversold around that, or overbought around that time. And it's just about getting ready to drop out of overbought here. It hasn't quite done it yet. So again, more reason, more confluence in why we may see that coming down there. But until we get the breakdowns, guys, we've still got to wait for them. We still have to see that price breaks down. That price does drop below here. Now, if for some weird reason, again, if we've got, zooming in real low, if we've got 5 waves down here, any upside, if this is just correct, if this is impulsive here and this is corrective, in advance above this swing high here, should go no higher really than this EQ up here at around 11,500. It's really kind of where it should be at. If it's going to go higher. I don't think it is. We've got a lot of upside wicks here coming down. The 1, 2, 3, 4 candles here. We got this little bit of demand showing up here, but I think overall, you do have this supply from this area right over here that you're kind of getting hit with. That's where you get that high volume node there. So yeah. Hey there, Spiral Architect. Good to see you, man. Let's see. But yeah, again, one of the bigger things here is the idea that on the 1 hour here, we've got that OBV dropping off, negative divergence here with price heading up. So it should pull price down with it. But that's really Bitcoin right there in a nutshell, guys. There's nothing too, significant about what it's doing or anything. I know everybody and their grandmother on YouTube or in crypto Twitter keeps screaming at you to buy the dip. It's going up, and they keep going through all this mental gymnastics to explain to you why price must rise. Because everything that's happened so far isn't leading it to rise. You guys have to remember, everybody's been saying it's going to continue going up here for what? Since, the last 4 months now. And it really hasn't. It keeps finding resistance, and printing those lower highs and lower lows on the very large time frames. And so these things, halvening and all these on-chain metrics, everybody say, oh, it's going to go up. And then, a month later, it's not. And so they're trying to find something else. So they're getting to this point now where they're just kind of trying to drag out just about anything they can to believe it's going to go up, because again, it's you guys have to understand, most of crypto Twitter are they're like you or worse. They're new traders. They don't really have a lot of experience. And don't tell me if you've been trading crypto for a year, you've got a lot of experience. I don't mean that to be disrespectful, guys, but just being in a market and buying and selling doesn't mean that you have, demonstrable experience trading. You may have demonstrable experience losing. Trading requires that you have a system and a style that's applied consistently and profitably. Anything else says, well, you've spent time losing money. And that's not the same thing. And, I think you guys understand what I'm saying with that. But you have to be careful out there. Because a lot of people say, oh, I've been in crypto since 2016. And yet, they can't trade worth a flip. They have no risk management. They're constantly very emotional about price action. And you guys don't want to be that way. Again, I like it. I like it when price goes up too. If I'm long, I like it when price goes up. But you can't let that be the driver of what the market's saying, or what you think the market's saying. Otherwise, guys, you're just, again, guys, it's a reality check here. If you do that and you let that happen, then that means you're going to set yourself up to lose money. And if you're here spending some time with me, the last thing I want you to do is lose money that you don't absolutely have to lose. Because the longer you can stay in the market while you're learning, the more more significantly increased the odds are that you're going to be able to become a trader that is successful. But the problem is, most new traders, they come in and they lose it all real quick, fast, and in a hurry at the beginning, and they become dissuaded with the market, and they think everybody's against them, and all these emotional responses. The market's rigged, everybody's manipulating me, Wall Street's stealing my money, whales manipulation, all this nonsense, guys. Those are just excuses. Because I'll tell you what, even if that were happening to the extent that crypto Twitter seems to believe it happens, you should still be able to trade it effectively. You can still trade it. Everyone's like, oh, wash trading, so this doesn't work and that does work. It all works. It still works. The only thing that would make these ideas and these ways that you trade not work, these systems and styles that have been developed over the years, is if what you're seeing on the chart is not really what's going on. So in other words, if this is fake data here, that would be the only reason it doesn't work. Otherwise, wash trading, manipulation, whatever, you still can trade it successfully, guys, and you should be able to, because you're basing it on what's going on the chart. And within that is always the information leading to further movement, as I've been trying to show you guys for 3 years now. So, yeah. Candle Shepherd says, whatever Bitcoin does, it better do it sooner rather than later. I can start feeling people's impatience showing up. Yeah. People tend to get impatient. Drives them nuts. Noah believes that Bitcoin is like playing roulette. Candle Shepherd continue on. People are getting much more easily upset at each other, more frustrated, etc. Yeah, and it's really bad when you're somebody like me who tries to just be, realistic about what's going on, and that doesn't mean I always say what emotionally bullish people want to hear. Matter of fact, more times than not lately, it's been what they don't want to hear. And so the fact that price isn't doing what they wanted to do right away, that just adds to the negativity with that. So yeah, it is what it is. Anybody that's out there on social media of any kind, guys, and they're talking about markets and whatnot, are putting themselves out there. You guys have to understand that, because most of the people that pay attention or that are going to see your content are going to be very emotional. They're not professional traders. They're professional money losers. And they'll be the first ones to jump up there and have the smart aleck remark and whatnot. I get comments all the time. Sometimes you guys see them there on Twitter where I post something and people don't even read what I post. They see a headline and it goes against their emotional bias of whatever the subject matter is, and immediately come out with really ridiculous remarks without even having read or viewed whatever it is that I put up there, just because of the headline. I'm telling you guys, if you're doing that, check yourself. Do something different because you're not going to get any further in life. You absolutely have to pay attention. You have to note when you're being emotional. I'm not saying emotions are bad, but I'm saying if you're trading and the way you're viewing the market is tainted by your emotion, you're going to have a lot more difficult time. You're going to make a lot worse trades throughout. So yeah. Let me see here. Amber Lee, what's going on? Says, morning, BSV took a good drop last night. Will it also follow Bitcoin as it drops? I like to buy the dips. I'm not very good at shorting. You listened to one of my videos twice yesterday and actually think I'm catching on. That's a great thing. That's exactly what that's the great thing of what we do at Discord, man. It gets you all immersed in there. And so you're constantly, exposed to all this consistently. And so it becomes, second nature. Things start making more sense. Generally, yeah. If Bitcoin's going down in general, the other majors and similar coins, BCH, BSV, Ethereum, Litecoin, XRP, all them, they should generally follow the same path. Yeah. So, if Bitcoin's being bullish, then barring something bad with the company itself, or, with BSV or whatever, barring anything, happening specifically to them, yeah, if Bitcoin's going up, they should go up. If Bitcoin's going down, they should go down. Yeah. Follow along more or less. Sure. Amber Lee saying, tired of being a professional money loser. Those big hits are not worth it because it's so much losing. Sold on my processes and teachings, going on the second month that I'm actually making a little money. It blows my mind. They're small amounts, but I'm actually profiting. That right there is the big thing, guys. Especially if you're coming from a position where you were losing money previously. It's baby steps. I know, as traders and whatever, just as human beings, we all want to make that money tomorrow, right? But the reality of it is, it's a process that takes time. And with any process, as a human being, with any process, any kind of change you're trying to do, you start with the small wins. And those progress into bigger wins and more consistency. But you don't, go from where you were to someplace new overnight. If you do, it was luck on a trade or something. If we're talking about trading, it was luck on a trade and you're going to go fall back into the same things you were doing. But developing a mindset, a way of doing things, a system, whether it's with trading or anything else in life, it takes time. It takes repetition. Because those things that you did previously that you have to unlearn, don't all unlearn at the same time. They take time. And not everything, especially in trading where, a lot of the stuff can be very contextual and can be a lot different. You're using words a lot of times that you don't normally use and concepts, things like contango and backwardization and, all these other scary words. But, again, being exposed to them on a daily basis and constantly hearing people talk about them, it makes you become more comfortable with it. And if you become more comfortable with something, your subconscious opens up and it allows you to pay attention better than what you would do before when you were fighting it. So it's all psychological, guys. It all works out really well. But man, glad to have you with us, man. Really, seriously. Spidey Shuffle, what's up? He says 4-hour tweezer bottoms possible. We're done dropping. I don't think so. Anything's possible. Let's go look right here. I wouldn't consider that like a reversal pattern, because basically this is your trend here. It's 3 candles on a 4-hour time frame. On a 4-hour time frame, this is a trend. This is just 3 candles. So I wouldn't consider that tweezer bottoms right there for reversal up. No. Now it doesn't mean we can't go up here a bit more, as I mentioned earlier, and hit some other upside targets prior to this swing high up here. But this is just just these, like I said, 3 candles on a 4-hour time frame. It's 12 hours, half a day. It's not a trend. And so with those reversal type candles and things that you're looking at, you want trends. You want demonstrable trends, not just pullbacks and whatnot along the way, or just a few candles in kind of thing. So yeah. Otherwise, what is this? It's a low of 11,201, and this one's a low of 11,215. $14 difference. Normally, yeah, that would probably be, you know, what you would look for, at least something like that for a tweezer bottoms. You want the two candle bottoms wicks pretty close to each other. But like I said, it's just three down here. And, you know, and of three down, the first one is the up and down. So really, it's just two down. Your first one is your reversal, and then it's just two candles down, which is this small little doji and then this big drop. So again, you know, 4-hour time frame, 3 candles, 2 candles is not a trend. So yeah, but if you were looking for tweezer bottoms or tweezer tops, that is the idea you would look for, though. Pretty close bottoms on the 2 candles together on it. Yeah, I mean, like I said, right now, this is kind of what we're watching here. If we can get a decline, you know, through this area here, that should convince some shorter term holders at least to sell off a bit, because you had this trend from here, from back here on the 23rd. So that's down here at about 10,130. That went up here to August or October 12th there at 11,736. So this has been going sideways. So failure of this to hold here should cause people to sell off, at least looking for this generic area right here. And then if it goes down there, the swing low to hold. So you should get some sell off in that area. Again, you know, and everything as far as what we're looking at downside is invalidated if we're getting above this swing high right here. So if price pushes above this 11,160, I'm sorry, 11,641 and 38 cents here on Coinbase. If we're pushing up above that, that invalidates this idea on the move down. Because the idea is this is a 1 and this is a 2, you know, and then we're coming down here. So if this is if this is 3, then it can't go above where 2 starts, kind of idea. Which in that case, you know, this would be 1 maybe, and this would be 2. And 2 can't go back where 1 starts. So, yeah. Is what gap filled? You have to let me know what gap you're talking about. So, I mean, that's where we are kind of, guys. Now, DXY, I think is the bigger story here. You know, again, we're kind of questionable here. We got some sideways, then boom, took off. Drop back, bounce off the pivot, took off again. Right now, I've kind of got this as a 1-2 here. So 1, 2, 3, 4, 5 gives you 1, 2. And then potentially here, just a 1, 2, and you get a 3, 4, and 5. Minimum wave 3 target is up here around 94.33. But what you really want to see is you want to see an advance above this swing high up here. So this 94.742, 94.742. You want to see a move above that. Intermittently, you know, in the meantime, this is the large channel resistance here. And so, you know, we hit it, we pull back, we hit it, we're pulling right back here. And it looks like we're just getting ready to kind of pull back and pop on through. We might get some serious acceleration moving through this, because this is that long-term channel here. As you can see, it goes all the way back here to the lows back there in March. So that's that long-term challenge. So if we're breaking above that, that should set us up to go. Now, the height of the channel here gives us a pattern target of about 98.27. You know, so based on the height of this, once we break through, right, if we break through right in this area. On the daily, you can see that we bounced out of oversold here. We're just on the bullish side of neutral now. So things are, you know, good on that larger time frame. Let's see here. 4 hours moved up. You know, it's got room to go up here. It's got room to fall as well. So again, don't want to get too overly excited. But for right now, you know, again, this is the level right here. You can see it hit resistance here, pull back, shot up through, came back, finding support on it. So again, you know, resistance, pull back, shoot up, support should head up, right? And so that's what we'll be looking for there. Yeah. Anyway, if we get our you know, our wave 3 up here, That gives us a minimum wave 5 of just about 94.55 or so, which is pretty close to the top up here. But again, we do want to get that move up through there. Right here, locally, we want to get a move above this. If this is an ABC right here, as we've got it, then this wave B swing high here at 93.9. We want to get above that. We hit it here at 93 point. Actually, you know what? Let me see here. Looks like we actually got a slightly higher high. This is 93.900. 93.904. Okay, so we did get a higher high here. So very, very, very slight higher high, but it is a higher high. So that should indicate that we're heading up from here now. Interesting. I totally missed that. I thought we were right there equal at it. So, well, that's good news. Let me see here. 1 hour again. 1 hour is reset down here and oversold. Getting ready to move here. You do have, on the 1 hour here, you do have this hidden bullish divergence right here from the 14th of October to today. Let's get that done. What is this, the 1 hour time frame? So it just shows up on that. But as you can see here, coming off of this swing low here to this swing low, you've got higher swing lows. But you got lower swing lows here on RSI. So you're getting that hidden bullish divergence while Stochc RSI is bottomed out and bouncing back out of oversold. So a bit of a confluence there now. The 11.2 gap is still a tiny bit left. Could it be considered fill? 11.2. Let me look back on Bitcoin here. What gap are we looking at? 11.2. What time frame are we looking at? 11.200. There's no gap here. There's just a wick there. There's just a wick here. I'm not sure what gap you're referring to. These are just wicks down here. You have a large candle shooting up, and then you just have wicks and a wicks. Oh, on the CME. Oh, okay. All right. That's why. So you guys got to give me information so I know where I'm looking. Let me see here. Let's see here. Let's see. Oh, you're talking about this one right here. Okay. Let's see. Okay, so that wasn't a triangle there. So we can get rid of that. You can see it's been a while since I've looked at this chart. It was back when we were over here trying to potentially see if we were going to get a triangle out of that. Let me get rid of some of this stuff here real quick. All right, this gap right here. This one, let's see here. The last gap here, it closed at 11,095. No, it's not considered filled. It would have to get down to 11,095 where this candle closed here to fill that gap right there. So yeah, that's still left to fill. And of course, we've still got my minimum target, which is this mid 9,500, 9,600 area down here where we've got this gap. That close right there is 96.45 is where that gap fill would be. So, yeah. But yeah, so those are still open gaps right there. So yeah, still bid going on there. Let me see here. Daily again, of course, Stochc RSI is very high up here. Just trying to see if we can see anything else and maybe give us a little bit more work on that. As far as this chart goes, I haven't looked at this chart in a while. Let's get rid of all this right here. Yeah, I think we had a triangle going on. Everybody's going the other way. I think we had like a A, B, and then 1, 2, 3, 4, 5 gives you C. A, B, C. So A, B, C, D, E here. So our triangle looks like that. So yellow line there we go. Like that right there. So you've got this, what would be an A here. B is a triangle. And that should give you a C up here. So go A, B, C. Right there. And then if we look at this, you know, you've got a 1, 2, and potentially 3, 4, and then 1, 2, 3, 4, 5. So it gets you your C up there. In terms of targets, based on patterns and stuff, about that. So we've got the target hit on that. I mean, everything says this should be, you know, done here. You got 1, 2, 3, 4, 5 for your A. A, B, C, D, E for your B. And then 1, 2, 3, 4, and then 5 up here for your C. So yeah, I mean, for the CME, it looks pretty clear that, you know, that we've got an ABC here. Unless you don't want to subscribe to the idea that this is a triangle here, but I think, I don't know, I think it's a pretty clear triangle. Right here. And again, that just gets you this A, B, C, D, E. There we go. So, I mean, you know, again, if I'm looking at that, that says, hey, should be done there, and it you know, it gets reversed right here at this high volume node, which, you know, again, makes all the sense in the world. So we should look for continuation down on that. The CME weekly looks nasty. Let's see. Oh yeah, that's not a great looking candle at all. But, you know, again, guys, remember the weekly. Oh wait, no, this is CME weekly, so this thing closes today. Yeah, that's not a good looking candle there. You're getting this this doji with this large upper wick. Get that gapped up here. I mean, that's not a good candle to have gapping up in the middle like that. This suggests downside if it closes like this today, which, you know, we've got a few hours. I don't see why it wouldn't with that. So yeah, I mean, if I'm looking at the CME, to me looks even more, you know, with downside coming than the other one does. But again, guys, I've got an ABC here because this could just be an ABC, right? I mean, if you're bullish, this is what you should be looking at right now. Don't listen to all this other nonsense about going up there. I think that's really much further out of left field than this ABC. I think if you're bullish, I think this ABC filling in this gap here, potentially getting down toward 91, 9200, is the best bullish scenario at the moment. And again, a lot of that comes with what we were looking at here on this, you know, I guess we'll look here on the 4-hour time frame. You know, looking at this as what appears to be a pretty clear ABC. You know, and you've got a 1, 2, 3, 4, 5 here. So you've got 5 down to give you an A, and then you've got an ABC to give you a B. It should be going down. And so, you know, if you're going down, if this is an ABC here, and that's the top of B, I mean, minimum, you're generally expecting, I say minimum, but you're generally expecting wave C to target the 100% extension, which is right here around almost 9,000 exactly. Which, where is this? This is just the support here of this whole prior thing. So again, if you're looking in terms of structure, yeah, you come on down here, you retest these lows, you bounce, and you head back up. Sure. But if this is not just an ABC, if it's a, you know, if it's a 1, 2, and you've got a 3 coming down, well, now you're looking down here for a minimum down here at around 76. And this is where y'all hate me. I know, it is what it is. But, take a look at where this is happening as far as resistance and support goes. Right here, right here. I mean, this is a very legitimate area here to target, for wave 3. And then, of course, you get a wave 5 down here, minimum. And, again, if it's going to do something like this, then as far as I'm concerned, if this is going to be like this larger structure here, if this is a Y, then this just becomes an A, B, C down. And so again, it just goes, like this. See if I can do this here real quick. Probably up to around this 9,000 area, I think. And so that gives you then, look at that. That actually goes right to where I was kind of looking, the 2,400 area. That gives you a 1-to-1 down there around 2,475. Now, obviously, it could go lower because I think we're going to have an exceptional bit of selling off going on if it drops below 3,000 for the reasons I've said before. But, minimum target right there. And what's going to happen at that point, again, you have to understand the psychology of what this would mean. Because you have people that have been holding on since, not even up here, but, since over here, since 2017. You're all the way back here in 2017 where you came down and it came right by what you were holding there, but then bounced up and you're feeling like, oh, okay, I'm good now. And then it pulled back again. You got scared, but you still held on and then went back up again. You're feeling good. And so now it's been, 3 years? So if it comes back down here and you're getting to this level again and you drop below it, most of the people holding over here, don't lie to yourselves, guys. Most of the people holding over here, especially if the rest of the economy's taking a huge hit and doing really crappy, these guys are going to sell. Most of them are going to sell. And that's the type of thing that markets usually look for. They usually try to induce that type of selling because that's the only way then that price can start a new uptrend. If you don't get the holders to sell, then they can always dump supply on, which keeps it from going up as you look for it. So you have to remove that supply from those people that are willing to sell short term, which not only are just people that'll get scared. We say weak hands like it's some kind of, put down or something. No, weak hands also refer to short term traders. If you go in there and you're just day trading, you're considered weak hands because you're not holding. You're always selling. The idea of that whole weak hand thing, contrary to what CT would have you guys believe, is just that you're not holding for the very long term. Now, whether that comes because you get emotional and you sell because you're scared, or if that means you're selling because you've got short-term targets and that's all you're trading short-term, is it moving? You're a trader. Either way, that's what weak hands are. So you need to shake out as much of that money as possible, get the market depressive going. It's never going back up, and then it goes back up. Because by that time, the people who bought all that supply that gets dumped, they're the ones that are going to hold on for a long time. So that supply isn't going to come out onto the market. So it concentrates supply into the hands of those that's going to hold it for a while, which means you don't have all this excessive supply coming on as prices moving up. So that's the psychology behind the move down here. But I'll tell you what, everybody talks about they're going to be a buyer. I guarantee you get down here, most people are not going to be buyers. They're going to be screaming that the sky is falling, the end of the world is coming, Bitcoin's dead again. To me, right now anyway, I don't see any reason not to believe that that's going to be a fantastic buying area. But we're human beings and we're emotional and it's difficult to deal with. And so it's understandable that people would be a little freaked out about that. But if you can keep your emotions under control, and other than the price getting down there, everything else is looking fine and structurally looking okay. There's no thing saying on there, that the government's going to, ban crypto or anything like that. To me, it seems like it seems to be a very good area to buy. And again, if we do this, if we get down to this area, that sets up the move for 6 figures. If we're going up from here, we're not hitting 6 figures, guys. Not right now. Not anytime soon. But if we make the dip back down here toward 2,000 and get that reset, then that really sets up the move to 100,000 plus. And that's what y'all want at the end of the day anyway, right? So yeah. C could be a double bottom. Is that possible? C of what? I'm sorry. You'll have to be a little bit more clear about what you're speaking about exactly. If you could let me know exactly, where you're talking about. Yeah, I can answer that. Sure. At what point do we lose the diagonal from March? Are we getting close to a big drop or just months of sideways? The diagonal from March is lost. If I understand what you're asking. I think you're asking about this right here, right? That diagonal's done. You can think of this area here as distribution. Over here. I mean, if you even want to look at you can look at it this way. You've got this significant range right here. Let me see here. Let me do some kind of color in here that makes a little bit of sense. Make it a little bit easier to see with all this other stuff here. Man. Let me get that EQ down there and this bright little blue color as well. We'll just do it like that. So, I mean, if we're looking at this, I mean, this is kind of that range we had here. And all we've done right here is shoot up through it, shoot back down through it, and a whole bunch of overlap on the move up here. Not only do we have a whole bunch of overlap, but we have price dropping. All right? And not only is price dropping, but we're getting the significant volume spikes here on the drops. So all that together suggests that this is corrective. And this right here kind of becomes this. You're looking for this right here. And so this is what we get to then. Let me see if I can get rid of this there. There we go. And I mean, so, if you step back and take a bigger look at it, this is what we're looking at. If I'm looking at this, I'm thinking, man, I'm thinking, let me see, actually this should go, there we go. If I'm looking at this, here, we got the move up right here, but that's it then, no follow through volume. Volume's kind of there, but then this strong bit of selling here on this move down. Consistent, strong selling all the way down. Like shoving your face down in the dirt, just kind of holding it there like a bully. So, I mean, if I look at something like this, man, I go, man, there's your last thrust up there. And this is your drop down. This, to me, this just becomes, potentially like a ellipse here, last point of supply. Comes back up here, checks this area. See, this is where that, it kind of says this is where the top is. Your guys, they mark this off as the top right here. You drop down hard, you come back up, you recheck this area to make sure they're serious about this being the top. And you get a rejection to head on back down on that. So, I mean, this is the bigger term look, the bigger idea of what we're looking at here. I believe. If we just kind of take out a lot of that noise and just look at the important levels and things that are going on here and what's going on where. I mean, that's where it sets you up at. Let me see here. Kamo, what's going on? It says, how many trading systems have you studied? Do you have any preference, any difference on different time frames? Man, I'll tell you what, for most of it out there, if it's something out there, I've probably used it at some point or another. Again, I've given you guys my story a few times before. But, when I made that decision, when I got tired of losing money, I made the decision to really become a student of the market. I just started looking at everything and anything and just kind of seeing how does it all work? What is the psychology behind why they think this system works or why it should work? And going through it and really trying to learn it and, trying to pull out anything maybe that's that made sense to me, that's something that maybe we should continue on. The basis of everything I do, though, is volume and price action. So most often via Wyckoff. That's really the beginning and end of what I do. Elliott Wave is good for confluence factors, for little bits of projection, for general guidelines of movement, overall movement and stuff. So Elliott Wave works real good with Wyckoff. They're very complementary. Beyond that, of course, I've developed things. I went in and studied, supply and demand zones, and I came up with what I use now, which are my supply and demand structures. Which anybody can tell you, that's been watching for a while, they end up working out really, really well. They're 90. God, I would say they're probably 98% effective. I've never actually checked, but pretty much guaranteed. Price is going to hit an EQ of that thing when we have it on there. And so I use that to kind of help find, to help zoom in on where those reversal points might be, those targets might be. But I think at the end of the day, I think volume and price action is the most effective thing you can do in the market if you learn how to read it properly. Otherwise, you're like most of crypto Twitter out there, and they say whatever they want to say because they don't understand the nuances in it. One of the things I used to hate was crypto Twitter used to always be, when I would talk about it, somebody would be like, oh, well, volume's higher. Or there's more volume there, or there's less volume there. And my response is always, so what? That doesn't mean anything. Volume is always relative to the price action of that particular candle, and then that volume and price action is relative to other volume and price action pairs in specific areas. It's not good enough to say volume is non-existent or volume's huge. It's non-existent or huge in relation to what? In what context? That's what you have to understand. And that's where most people miss the mark when they're trying to do it. So, hey there, Hank. Good to see you. Hey, I appreciate that, Chemo. You're picking up on the market psychology and how to think about trading. That's the big thing, guys. At the end of the day, I give you my ideas about where price is going. To me, that's all secondary. I want you to understand, what's going on with the markets. Why are they moving? What may actually make them go? Stop. I want to get you off this whole, the news determines where the market's going, all this other nonsense and all this other silly stuff that you hear in social media and in other places. I want to get you into the right mindset about why things may be happening. Because at the end of the day, guys, the market is emotional. That's what it is. It's not logical. It's not rational. It is emotional. But because humans act in a specific way with their emotions, we're able to better track how it may go. But as long as you're thinking it's something else, it's going to make it a lot harder to trade. Oh, man, love point and figure charts. Yeah. I got into point and figure charts because of Wyckoff. Because, excuse me, he had a specific way of using them with horizontal counts. And man, there's some great stuff. Like I said, back here, back when we were moving this move up here, and everybody kept saying it was going to die here, and it was never going to get past here, it was going to die here. And, we kept making all the calls. No, it's going to move up. No problem. It's going to do easily. And then we got up here, and we gave them a target up here in this area. And of course we hit that and came off. I mean, that's all easily done with point and figure. So, I mean, this target area up here was decided down here via point and figure. So yeah, I'm a big fan of point and figure. Point and figure is something that a lot of traders don't do because it's X's and O's. It's columns of X's and O's. And it's not so pretty like their charts and everything they want to do. But it is such an effective thing if you learn to use it properly. Sure. Hey there, this is I can always is that Timia? I can't ever I'm always afraid I'm going to screw that up, so I try not to say that part of the name. But it says, why do you think all these big companies decided to buy Bitcoin now? I suppose some of them buy Bitcoin directly from miners and others simply trade some sort of contracts. I don't think that they're just deciding to do it now. I think, some of them have been picking them up every so often along the way. But, again, it's nothing different than what I haven't described since I started doing these live streams back in, I guess it's almost been 3 years now, right? 2 years? And it's just, it's just the nature of what's going on. Price continues to rise. And so those that are a little bit more nimble, those companies that are a bit more nimble, they're not as big, they're going to jump in. They're going to try and take advantage of it. And usually not with a significant portion of their actual overall company value, but enough to make some news. And so the way they usually buy, for the most times, is they'll do over-the-counter orders. They'll find some service out there that can source however much they're trying to buy. Sometimes they'll have a system where they buy and sell on the market, depending on how the market's looking at the time. But the hard thing about that is you have to have a good system with that, because you don't want to make the market. You don't want to make the market more bullish than it is. So the price goes up, so you have to pay for higher prices. So yeah, but there's that. Some people that are running their companies may be concerned about what's going on with money, fiat, which is not it's definitely something that you would normally expect somebody to be concerned about. Again, my idea is that we're going to have deflation and then potentially stagflation before we even get inflation. A lot of people are not very educated in terms of economics, though. And they simply think that, because of QE, that means instant inflation. And so that might spur some of them to buy on right now. By the way, guys, just because somebody is the CEO of some large company doesn't mean that they're all that great economically. As far as understanding economics. Now, they should be a little bit better than most, at least, because if they're running a larger company, usually it's multinational, and they have all the global stuff they have to deal with, so they've got a lot more exposure to that. But don't assume that just because somebody is a company CEO that there's some kind of economist, that they've got any real training in that. And unfortunately, we get a lot of that in crypto Twitter, where you guys idolize these people who make a lot of noise on there. Some of them own a little company here or there or whatever, but, and all of a sudden you think, they know what they're talking about. And many of them don't. But, again, it's all in perception, and they make it look like they do, and everybody joins in and joins on the bandwagon, and, Then when things go the other way, they say, you shouldn't have been just blindly following me, right? I'm going to have to check that up then. Let me see here. Hey, what's going on, Clark, man? Good to see you. Let me see here. Hank says it was also a simple fib target. What was the simple fib target? Sorry, man. Not sure I'm following you on that. Joe the Butcher, what's going on, man? Do I have a point and figure video? Not yet. Not yet. We're going to put something together, though. 2 questions. Do you still see the S&P and gold deflating? Yes. I see them dropping, yes. Now, I don't... they're not deflating. Again, we talk about language and using it properly. Deflation is to inflate, or to deflate is to make something bigger or to make it, smaller. So to increase the number of, or decrease the number of, right? Of how much is there. But, prices are just price levels. Hope that makes sense. So deflation leads to lower prices, lower value on those products that are denominated in dollars if it's U.S. deflation. Yeah. What do I see as the most interesting thing to learn about in terms of use for the future? In what area are you talking about? Are you just talking about in life in general, or what are you talking about there as far as what the most interesting thing to learn about? Spidey says, you think all those big companies would panic sell when 3,000 gets ran? Not sure why that matters. I can say this right now. If a company is publicly held in any way, they're under intense scrutiny by their stockholders. And so if you're buying in at, say, 11,000 and Bitcoin goes down to 3,000, you're going to lose a lot of shareholders, because the value of your company has declined significantly, in relation to that. You are not doing what you should be doing as a company there. You're taking chances that you shouldn't be taking. And that could potentially open them up to lawsuits. Yeah. Because the idea is they have a, they have a duty to do what's best for their shareholders. And so, if some kind of drop like that, sure. Might not even have to wait for it to get that low. But regardless if they do or not, that doesn't mean price can't go down. And the idea is if these bigger companies are buying it, hopefully they're holding on for the long term. Hopefully they understand that 3,000, 2,000 is a possibility, and they're okay with that. And they can hold on to it. Those would be the types of strong hands that you're looking for. And in those cases, those companies would probably buy up more, at those levels. But yeah, the general public, oh yeah, they're going to sell like a mother. Oh yeah. Oh, my point and figure target. Oh, okay, Hank, I got you. What is a good time frame for point and figure counting? Well, I mean, it just depends on what you're trading. It's like anything else. It's used at all different time frames. Point and figure is great if you do it properly to get targets. And all you have to remember is the shorter your time frame, the smaller your box size. Yeah. That way you get more of that information on there. But there's no better time or worse time. If you're looking for a general overall market movement, you want to have those the larger. But again, it's all just dependent. Everything, like everything else, is just dependent on the actual time frames, or I mean the actual where you're planning on buying and selling, how long you're planning on holding for, those types of things. If you want to be a successful entrepreneur, what would be the fields where there's an unfulfilled need? I imagine technology, bioengineering, medicine. I'm going to be honest with you guys. If you want to become successful, my belief, those of you know I think most of y'all know my educational background in both structured education and beyond that. But I honestly believe the more of a generalist you are, the more successful you can be. It's a lot more difficult for you to be exceptionally successful, especially as an entrepreneur, if you are a specialist. Generalists are the ones that tend to move up in the ranks of companies. Generalists are the ones that tend to, because they've got you're able to see the bigger picture, not just that one thing you're doing. So I think, my thought is if you want to be successful, I think you study, all the classic stuff, guys, the humanities, the things that everybody says, oh, I got this $40,000 humanities degree and I can't get a job. It's because you never understood how to use it. You went to school expecting to get a job based on a skill set. But humanities degrees are very much more generalist degrees. They're how to think, how to reason, how to speak, how to write, how to research. It all comes back to adding all these things together in you. And I think that's the way to do it. I think you study a plethora of things, different subjects. If you're looking for fields that'll probably really get, I mean, obviously technology is huge. I don't see any reason for that to not continue on. Medical field's a great one, I think, because even whether the economy goes up or down, everybody needs medical care, and it seems like more and more everybody thinks the state should take care of it. So there should be more of a demand on that. But yeah, I think beyond just a specific skill set, I think really you want to increase your becoming more of a generalist, for sure. Alternative energies, I think that's got some future, but we've got to still get through. Remember, we've had so much time with the old way of doing things as far as energy goes. So there's going to be a lot of flack on that. But even the big guys, BP and whatnot, are doing all their alternative energy. So yeah, that would be someplace to get in. It's still kind of new, so it's still expensive though right now to get involved with that. Let me see here. Amber Lee, you have a great weekend as well. I appreciate you checking in. Cornholio, what's up? He says, Bitcoin is following the SPX to the tick. Can you use that as an edge? I don't think so. They're both just responding to what's going on with the DXY. It's not so much that they're following each other so much as they are responding to the DXY. So I don't really see it as much of an edge on that. Let me see here. Vamsy says, why should Bitcoin reach 100,000? No real adoption, speculatively used a hedged asset, but nothing to back that up. It's not that it should. It's that I think it will. Based on, again, different ways we look at it. If we look at things like Elliott Wave, if we look at more broad ideas about where overall where the monetary financial system is, not just locally but globally, if we look at the way that the governments work and the things that they, the way in which they censor and maybe control the means of income for their people. If we look at, all these things, if we look at where it is right now, as small as it is, and we look at the adoption up to this point, so it's not that it should go up there. I think it will. Anything can happen, but, these reasons, go beyond that. Right now, it's a speculative asset. If there's one reason it's going to go to 100K, it's because it's speculative. People don't buy the nonsense. People aren't buying it because of the tech. That's such BS, man. People are buying it because they expect that at some point they can sell their Bitcoin for more dollars. Because the dollar is still king. Fiat currency still rules the world. And so people are buying it because they see it. Think about it. When Bitcoin's really popping, everybody's talking about Lambos and all that stupid stuff, right? Well, how are you going to buy it? You're going to buy it because the value of it's going to increase. Well, the only way the value of it increases is if the thing it's valued against decreases, in relation, right? So when you look at Bitcoin versus the dollar, you're not buying Bitcoin just to use. You're not buying it because you can take 10 of your dollars and it'll be worth, $10 in Bitcoin tomorrow and the next day or whatever. You're doing it because you hope that $10 in Bitcoin is going to be worth $15 or $20 or $100. You're still thinking in terms of fiat. Most people are still thinking that way. This is a trader's market. It's a speculator's market. Pure off, guys. Stop buying the nonsense that people are buying it for the tech. I honestly don't believe maybe there's a couple of people. Nothing in any way significant that would have any effect at all on it. The greatest proportion, significantly, is going to be buying it for the fact it's going to increase in value that they're hoping for. So yeah. Hank, man, I agree. He says success is an unintended consequence of passion or brilliance. Passion. Guys, and here's the other thing. You don't have to be obscenely smart or have done really well in school to be successful in life. I know people myself, personally, and of course we all have heard stories, of people that have been dropouts or never did well in school or whatever, who end up becoming successful. Being successful has a lot more to do with drive and ambition and follow through and the ability to speak with people in a way that makes them comfortable. People don't buy products, they buy the people. All right? I don't care what you're selling, guys. If you're a salesperson, by the way, and you don't understand this, listen up. Heads up. Here's your this will change your entire earnings here. People buy you, not what you're selling. They don't care what you're selling. And you could be selling the best thing in the world, but if they don't like you, they will not buy it. You could be selling the worst thing in the world, but if they like you, they will buy it. So, it's all about interpersonal skills and whatnot. Let me see here. Dana says, funny thing though, I got introduced to Bitcoin by someone who actually needs Bitcoin to pay for stuff he can't buy for dollars or euro. You don't want to know what he's actually paying for. Oh, I'm sure. And so you're going to have those few people who buy for that. Yeah, again, I sit here and say nobody's doing it. Like I said, there's a few people out there that are doing it. But not to the greatest extent that it's going to have any real significance on the value. Significantly, the largest group of people that are interested in Bitcoin and other cryptocurrencies are buying it because they expect it to go up in value. So yeah. Vamsey is not convinced. Says in 2017 Bitcoin went from 2000 to 20 because of the ICO hype. This time we had DeFi hype, and still we are at 11. It's hard to believe that Bitcoin goes to 100K without any hype created around these assets. You don't need hype. You just need a market that's worn itself out and people ignore for a while so it can get going, and then they get involved as it's moving up. If people are excited about a market at the bottom, you usually don't expect the market to go up from that. The market bottoms out when people give up on it. When most of the people just go, you know what, it's gone. I'm just done. I'm done. I'm getting out of this. I'm never coming back. Waste of time, waste of money. Should never have been involved in this. When a large group of people are doing that, that's when the bottom's near. DeFi and all this stuff, the fact it's happened, not at the top, tells me, that we're likely not done correcting yet. Again, this is just based on all this, and I could be completely wrong. But things like what's been going on with DeFi and all this stuff doesn't usually happen at the bottom of a market. That's the thing that happens toward the top when everybody gets all excitable and goes on about it. So yeah. Alex says hype isn't bad if you're holding the right bags. Yeah, it's great if you're holding the right bags. Got to hold those right bags though, and then get out. Hank loves DeFi and DEXs. No, yeah, it's unregistered. But see, here's the thing: people erroneously believe that because a DEX, is supposed to be decentralized and all that, companies, people can't be held responsible. No, that's wrong. That's wrong. Especially here in the U.S., they'll pull people up in court real quick, fast, and in a hurry. If you create something and it's out there, you're responsible for it. Period. Yeah. You can't just say, "Oh, I washed my hands of it." No, you're kind of there. Alex, man, I appreciate you. What I say kind of reminds you of a sermon sometimes. Glad to be part of the congregation. Well, I appreciate the kind words, man. Yeah, Vamsey, I mean, I can see what you're saying, definitely. But again, I think this is all, it still follows my ideas of what I've been talking about for a while now. As far as potentially still having a lower low to go to shake out, to really kind of shake people out. Because there was so much of a run up in 2017 so quickly. So people are still holding on. And we need to the market needs to rid itself of as many of those people as possible. And so the fact that DeFi coming out where it is, and we're not even, we're basically at around half the way to the all-time high, isn't very convincing as far as that goes. Let me see here. Let me kind of catch on. Let's see what else we got to look at here, guys. Hey, by the way, I appreciate the conversation, guys. Y'all are great. I appreciate you jumping in here and joining in and everything. Let me see. Let me pull up a chart here. All right. Let's look at the S&P E-minis here. All right, S&P E-minis. I've got it done up here, and I believe we're on a 1 here and working on a 2. If so, we've hit the 70.5 retracement. So it might or might not be done around this area here. I would look for it to really start reversing around here if it's done. Obviously this could still be a 1, a 2 here until it goes above this swing high here at 35.41. So as long as we're below that and we reverse, then, it's still 1, 2 working on down here. Let me see. Yeah, so we'll see if we can get some downside here. We're just kind of hitting the resistance here of this base channel for this ABC here. Kind of hitting that. Hitting the downside channel here as well. So yeah, so we'll see if we can get a reversal around this area here. We've got that high volume node up here at around 35.13, 35.15 kind of area. Just above that's the 78.6. So, I could see maybe one more push up there toward that 78.6 maybe, and then the move down if it's going to do that. But we really need to see a decline below this swing low here to start feeling like, okay, this top is really kind of probably in. So that's what I'm going to look for on that. Yeah, Hank, definitely nice to have different opinions and people respecting each other all the same. Yeah, exactly, guys. Because guess what? Myself, you, the person next to you, none of us has a crystal ball. None of us knows what it's going to do. We do the best we can with what we have, with what we know. Me in particular, I have a certain educational background and, a few decades worth of experience in trading multiple markets. But that doesn't mean I'm going to be right all the time, or even half the time. But it does give me something that I can work with. So, that's what I do. And so, again, most importantly, the same thing I say all the time. The most important thing you're going to ever do as a trader, guys and gals, is risk management. That's it. That is the most important part of trading right there. For the reasons I already said, we don't have crystal balls. So nothing is guaranteed. So you absolutely have to be prepared for what if it goes the other way? What if your trade does not go right? Do you know where your invalidation level is? And is it really thought out, or is it just, I'm just going to put it right there? If you just put it right there, it's not an invalidation level. It's just a random place on the chart. You have to understand within your style of trading what, denotes a invalidation level. Again, if you're trading Elliott Wave, and you think this is a 1 here, and this is a 2, well, you know for a fact that your invalidation level is that swing high there, because you know that according to the Elliott Wave system of trading, Wave 2 cannot move beyond where Wave 1 starts. It cannot retrace more than 100% of Wave 1. You know that. That is your definitive invalidation level. If you believe this is an A and a B and a C here, then you know your validation level is the wave B termination point here. Because again, if it's an A, B, C, C cannot retrace below B. So once it does, that says this is done. And if this is done, that means this should be done. Now, it's possible that your interpretation could be wrong. Maybe this is a 1, 2, 3, 4, 5. So your interpretation could be wrong. But it doesn't matter if your interpretation is wrong, because your risk management is based on that system. So if it drops down below here, if you're shorting and you're coming down, you're below here, you're in money, you're doing good. But depending on how it plays down, can let you know, okay, well, I'm viewing this wrong here. But no matter how you trade, guys, no matter what systems you're using, again, if you're using Wyckoff and you're doing a distribution area, you can't have a sell before you have an impulsive move up. Sells come afterward. You can't have a last point of supply before you have your upthrust, or your upthrust after distribution. But yet people try to label it that way. But you can't. That's because that's not what that place is. And so if you're using that system, then again, invalidation levels, validation levels, things that you're watching, things that should go a certain way. So yeah. Let me see here. Okay, so we've got this. Let's see. We can jump here at gold. You guys want to look at gold real quick? Let's see. What's going on with gold? Yeah, that's what's going on with gold. I've got all this extra on here. Let me zoom out a little bit here. Daily. All right, so the most important thing about the daily here, and let me get rid of this on a different time frame. God dog it. Oh man, I seem to have any issues on TradingView lately. Pain in the rear end. And then this right here, well, we could leave this one on because it gives the retracement there. But, I mean, the reality of it is right now, everything else aside, we're sitting below the pivot. That's the reality right now. So if price can't get above this kind of pivot area here, we should be heading down. And if we drop below this swing low, next target should be this swing low area here. If you're dropping through that, well, now you're looking, getting down here. These swing lows, next one over here. But this is a downtrend. You've got a high, you've got a low. You've got a lower high, lower low. Right now, you've potentially got a lower high, but this has to drop down to a new lower low to mark that as a lower high. So you have a clear downtrend from August. 2.5 months. Clear downtrend. This is what we're kind of seeing. I've got it as a 1-2. 1-2 here. And then locally, let me zoom in a bit here again on that 1 hour there. Locally, I'm kind of looking at this right now as a 1-2, so A, B, C. And if this is an A, B, C, then a drop below this wave B swing low, as I talked about, is my validation point that this is likely an ABC. And if we move down below that wave 1 there, that closes this whole thing off as an ABC and done. Now, of course, that doesn't mean this couldn't be, say, an ABC and then an ABC and then 1, 2, 3, 4, 5 get a flat. But it means that at least this zigzag is completed once you drop down below where it starts here at that wave 1 swing low. Hey there, Deadly. Good to see you, man. So yeah, and I mean, so bigger picture here on this hourly time frame. Let me see here. You've got this base channel coming out of here, and we're kind of finding support, looking for the decline through it. Again, locally right here, you've got lower highs and lower lows. So there's not a whole lot screaming, that we should be heading up at this time anyway. Again, if you zoom out here to the daily, that Stochh RSI is bouncing out of oversold or overbought here. RSI still hasn't hit oversold yet. So, it gives more credence to the idea that price may be heading down overall. My thoughts are still right now that we're heading down below $1,000. And then you go, oh no, but that can't happen. And I say, but stop being emotional, because that's all it is emotion. But no, it's not, because the Fed's printing all this money. Again, you're being emotional. You haven't even gone to check and understand what QE is and why what you're saying doesn't make any sense right now. You have to understand how QE is implemented, guys. It's not just that they're just creating all this money, it's going out of the system. Again, I've said this before. The QE money is basically reserves for the banks. It's reserves that are held at the Federal Reserve, which means nobody touches it. It does not go anywhere. It just sits there. And if there are not new links, if there are not new loans showing up, then it just sits there. It's not making its way out into the public. Remember, the whole idea of the QE, the way you're doing it with the money going to the banks there, is to encourage them to lend. Because we are in a credit bubble. I mean, our growth is based on credit expansion. And if credit is not expanding, we're not growing. And if we're not growing, then we're necessarily falling back. And so, to simply say, oh, QE, money printer goes, round and round and round and prints all this money. I mean, that's just nonsense. It shows that you didn't take the time, at the very least, to at least understand what QE is. But, again, that's most of crypto Twitter, right? Sure. Let me see here. I seem to be emotionally attached to it going down. No, we just don't have any reason to say it's going up at the moment. Any reason that's better than the ones that's going down, that is. But again, you guys know where my invalidation levels are. We've talked about them multiple times. We've talked about multiple possible bullish alternatives that we're going to watch if price continues down. So yeah, there's no emotion for me at all. It's completely based on, what's it doing there. Um, Oil is a real pain in the rear end right now. Oil is a real interesting thing here. So we've got this kind of range here that's been going on since September. As you can see here, from September 8th up through, the range here is from September 8th to September 18th. So we're basically just kind of doing this sideways thing, not making a whole lot of sense. Gonna have to do something about that blue because that ain't gonna work right here for us, is it? Let's see. We'll do that red. Make it a little bit easier to see here. Let's see. There we go. And so, I mean, this is basically what we're looking at. That's it. So basically, we're looking at, okay, does price break out above the swing high here, or does it break down below the swing low? There's a couple of possible bearish scenarios. Again, A, B, C coming down. There could be a triangle forming here as a B. So, I've got this as an A right here. Could be a B. So, A, B, C. You'd have to have a D and then an E here and then head down. It's possibly we could still have some further upside here as far as corrections go. But if this is just going to be corrective up, it has to stay below this swing low or swing high up here. $43.78. It cannot go above that. If it goes above that, that means this is not wave 5 right here. Most likely that this is wave 4 here, and then we've got wave 5 still happening. But even in that case, we should be much closer to a top than not. So yeah, again, we'll just kind of doing all things at the moment. I'm still not sure yet if remember my big thesis back before it dropped down to below zero when we were talking about it getting down there to around $4 or so. Remember that was part of my wave 3. So we would have the wave 3, and then this advance we have now would be wave 4, and then we'd have another lower low for wave 5. I still think that makes the most sense, especially if we look at the pandemic and the way the countries are locking down and how that's affecting travel and production and all these things, which means less demand for oil. And then we look at Saudi kicking it up now to really take advantage because they can, produce oil very cheaply compared to most places in the world. And so they can really kind of exert their dominance during this time of depressive oil prices, to come out ahead when it's all said and done. So, oil companies are already producing more than's needed right now. There's already a supply glut out there, and they're producing more. And then Saudi saying we're going to produce even more now. So that's much more supply than's needed, so price should come down just with that alone. But the other side of me, the human part of me goes, man, it's the first time we ever had oil below zero. So basically, if you guys don't understand what happened there, oil closed at something like I think it was like $36 or $38 a barrel back in below zero, negative $36 or $38 a barrel back in May. Those were those WTI contracts, West Texas Intermediate Crude. And so what that meant was literally they had to sell their oil. They had to pay people to buy their oil. They were paying $36 to $38 a barrel to get somebody to take it off their hands. That is literally what happened. They weren't making money on that. They were paying people to take it. And so it's, and with that such a large drop there, the human part of me goes, man, it's hard to imagine price dropping below that for a wave 5. But the wave 5 still makes a lot of sense. But I still, again, have that human side of me that kicks in going, man, I don't know. So if that's correct, then this is just wave 4 before wave 5. But the other alternative, obviously, is that the bottom is in, and this is wave 1 up. And so what we'll see is on the pullback, how far do we pull back? And that'll tell us if it's a 1-2 here, or if it's a 4 and a 5 still to go. Clarkman says oil looking kind of bullish above the pivot, the EQ structure, but supply is excessive, so a low should come up soon. Am I right? Would think so. But honestly, again, you keep up with my updates there. You see, we just continue to talk about this sideways because that's really just kind of where we're sitting right now. Do we get a rejection here and head on down? Again, then we could get a triangle out of it and head down lower. But that would say that this is an ABC, which would mean this is probably a 1. It's an ABC, and then we got a, for a 2 and then 3. Of course, it's also possible this could be an A, and then an ABC down for a B, and then up for a C for 4, and then finish down. So there's still some possibilities on there, depending on the decline. But if this is a triangle right here, it increases the odds that the bottom is in. Because it can't be a 1, 2 here if this is a triangle. It would have to be a B. Can't be a 2. So that, again, increases the odds that the bottom is probably in. But either way, we should be looking for oil to get down there around $30 a barrel. $32 a barrel minimally. If the top is 5 right there where I have it. Generally, we should be looking about that $30 area as a minimum for a wave C. But could go lower than that. So we'll see how it continues to play out there. Well, let me see. Yeah, because I got it down here around 30. Yeah. 29.30 or so. So we'll see how that goes on there. Excuse me. I don't know that price would dip below 0 more often, data. I think just if we get to that point where alternative energy is really that detrimental to oil prices, I think there's just going to be less oil produced. And so that'll help, with the prices. There just won't be as much oil produced. So we'll see how all that works out. Alternative energy is still, really expensive. It's more expensive than shale drilling. And shale drilling for oil is really expensive. The Saudis don't have to use shale. They've got, easily accessible oil and lots of it. Which again, I think I saw something like $4 a barrel is what they can produce oil at or something like that. It's absolutely insane. I don't know who else can keep up with them at that rate. But they could really put the hurt on other countries if they ramp up production and just kind of continue flooding the market. Because they can withstand these low oil prices because they can produce it so cheaply. But other countries obviously cannot. The shale industry itself cannot because shale is so expensive to drill for, comparatively. It would be good to finish up with the oil oligarchy. Yeah, but there's always gonna be some whether it's alternative energy or somebody's always gonna kind of control that. I don't think it'll ever really change, unfortunately. But I agree. It's really it hampers progress. When you have prices at levels that are not where they should be according to the market, that always hampers progress. And that's the problem we have with governments, because they're trying to affect production, with their money supply and their interest rates, trying to get you to go out there and continue to overproduce and overconsume so that the economy can continue growing even when it needs to take a step back and take a breather. And that causes these larger booms and busts that you see. So booms and busts, people say, "Oh, it's the capitalist thing." It's not the capitalist thing; it's the government intervention. Is what it is. The government intervention skews risk. If government goes in there and they make interest rates artificially low, that's going to lead to malinvestment. Why? Because people that shouldn't be able to get loans are going to get them, and then they're going to spend them a lot of times on projects that are really just a waste of money overall. So that money that could have gone to something more productive for society goes to wasted interest. Again, it's Austrian economics refers to it as malinvestment. And there comes a reckoning. You can only do so much malinvestment before the system just has to reset. And that's why you get these large booms and then large busts. So yeah. Nuclear's got a lot of potential, but people are scared. That's still a big thing, the fear of nuke energy. People still, remember Chernobyl, stuff like that. More recently, what happened over there in Japan. And so it's difficult to get nuclear reactors put into somebody's backyard, so to speak. So that's the big thing there. Nuclear would be great. I mean, it's clean, it's efficient. But there is that drawdown, that radiation drawdown. Yeah. And then, of course, Stux's virus, computer virus, and the way it was implemented over there in the Middle East. All these networks are susceptible to that kind of stuff. Last thing you want is a meltdown at a nuke plant, right? So, yeah. Sean said, I just read solar power just made records by being the cheapest electricity ever produced, I think, in Australia or somewhere. Yeah, now the other thing with solar and stuff like that is not only is it the production of it, but then the transference of it. You can't just put it into bottles, right? Like you could do with air or water or something, right? Now you can put it in batteries, but batteries they're heavy, they're cumbersome. How do you move them around? Okay, so maybe you have lines in. You're like here in the U.S. when we are doing oil, the big oil lines. They have the big oil lines that lead to places like Cushing, which is the hub. So oil just flows from the pipeline, down the pipeline. So you can maybe do the same thing with energy there, but a lot of this infrastructure is not in place in most countries. So that's a very expensive cost and time to do it. So those are the other things you have to consider as well for alternative energy. How do you get energy there? If you think about wind energy, so the turbines turn, that creates electricity, which then has to be locked up in batteries. And that's what they do, more or less. So when you're trying to get that over long distances, it becomes expensive again. It's not just the cost of actually producing it, it's the cost of producing it and getting it where it needs to go. It's the overall cost associated with it. Yeah. Do I think the government should not intervene, let the businesses fail, or would you be selective? No, I honestly believe they shouldn't. My way of thinking is not conducive for most people. I think people should be left to learn to do for themselves. Either you can do or you can't. What it does is it makes people more cautious with their decisions. It makes them kind of take more time and effort in the decisions that they're making. And so to me, that's a big thing. There seems to be not enough of what we would look at as personal responsibility these days. It's always everybody else's fault. Everybody's a victim, right? But if you're always a victim, you don't know what you can and can't do. You never exert yourself. You never go to those great lengths that you can do. And it is those things that progress society. Society is better off for people being pushed to their limits, for people learning what they can and can't handle, for learning that they are stronger than they believe they are. Society ends up winning because people push and they persevere and they continue. They don't just give up at the first bit of inconvenience. And so, people learn to become more efficient if you're in business. If you can't count on anybody else, you learn to start cutting, the stuff that you can cut. And if you do it correctly, you're rewarded by the market. If you don't, you go out. And if you go out, you go out. You tried, right? But as long as you're in business, but you're not doing it as you should, society loses. It's money that could be invested elsewhere for things that are more productive for society. So, yeah. Yeah, Hank, exactly. Yeah, you got to transfer the electricity to produce other forms of storage. Yeah, not just the batteries. That's what I was talking about when I was comparing it to what we have here in the U.S. with the WTI, crude oil here, and the way that we send it from the oil fields down the pipelines to the hubs like Cushing and whatnot, Cushing, Oklahoma. Yeah. Again, you would need to have that same type of infrastructure electricity if you want to really use solar or wind or whatever on a large scale. You would have to have that kind of infrastructure to send it around. Yeah. But I think government is way too involved, and I think people have become way too easy to say government should. Everybody believes they have a right to all this stuff that really they don't. Listen, guys, you weren't guaranteed to be born. And what I mean is anything could have happened before you were born. It is a miracle that you made it through the whole process of being in your mother's belly there and kind of growing and making it out. And so why should there be any guarantees in life? You weren't guaranteed. It wasn't guaranteed that when you were conceived you would be born. Whole bunch of environmental factors could have happened that could have kept you from being born. I'm not even talking about government and allowing anything. I don't want to get into all that stuff. I'm just talking about just in general, just biologically. The fact that you were born is a heck of a chance. But people get out here and now all of a sudden everything. They deserve everything. You don't deserve anything. You deserve to be grateful that you were born and now do something with your life. Get out there and do something with it. Stop trying to get other people to do for you. Because again, I believe that it is that which drives progress societally. I'm not even talking about governments. I'm just talking about people, societies, groups of people. You grow because people push and they have ideas and they try and they don't give up. That's why we get the things that we get. That's why we advance. Not because of government. So I think that's the real thing. Let me see here. Hank says that he believes in the Netherlands wind energy is the cheapest. 40% of their energy needs, I believe. He says 15% wind. Sweden had by far the highest share in 2018 with more than half, 54.6% of its energy coming from renewable sources, especially from hydropower and bioenergy. I remember that. Yeah. And then Finland, Latvia, Denmark, and Austria. But of course, you're talking about very small countries in the grand scheme of things. If you talk about the U.S. versus Sweden or Latvia or something like that, a much bigger region here. So yeah. Sean says, I wish we could have a system like Germany where you can have home solar power and be paid for it. There in Louisiana, it's illegal to disconnect from the grid. Oh, is it really still there? Yeah. Here in Texas, if you're producing energy, you can sell it back to the Texas grid. Texas is the only one in the U.S., the only state with its own grid. So in Texas, yeah, if you're producing wind energy or solar energy or whatever, you can tap into the grid and sell any excess back to them if you'd like to. Let me see here. 80% of my country is empty. Yeah, we do tend to congregate in certain areas for sure. I don't know about the idea that 80% is empty though. Let me see here. No, but then you actually have to pay. Yeah, but the EU is just a bunch of smaller countries, Hank. It's apples and oranges with the U.S. The EU is separate countries. The U.S. is all one country. So yeah. Yeah, Sean's really hating Louisiana right now. Man, y'all have get hit by a few hurricanes here recently too, man. Over there in Louisiana. Man, it just seems like they all just keep on heading that way this summer here. The U.S. is just a bunch of states. Can anybody tell Hank's disdain for the U.S. and the dollar? Clarkman says we don't get along in the EU. We just tolerate each other. I think most of the U.S. doesn't even tolerate each other. No, it does. Most of the U.S. is pretty good. Social stuff going on right now is just, it is what it is. It's a product of everything that's happening, everything's going on. So anyway, guys, I mean, that's what I'm kind of looking at here with everything. So, overall, really just kind of expecting for continuation downward, especially if we get this break here, this break up through here. To me, this is a big deal if we break through here, but I definitely want to see some impulsiveness and follow through above this 94.73, 94.72 area up here. Impulsive move above that to really kind of set it in. But that should say, hey, we're done and good to go. Because, I mean, you can look right here and go 1, 2, 3, 4 right now. Right now, I've got this as a 1, 2, 1, 2. So, again, you need that move up there. Because even if it's not, it's at least a 1, 2, 3, 4, 5. And if it's 5 up, this is the bottom here. Most likely. And you could still have an A and a B and a C, but then you're really kind of moving up. And again, that just kind of changes everything else. But that's what I'm looking for right now, guys. And if this is doing that, there's no reason to believe that that stocks and and oil and everything else are going to continue to go up, especially if the DXY moves impulsively. If you see a strong move by the DXY, you should see a similarly opposite strong move, in the other assets. So yeah. But anyway, there you go, guys. That'll do it. That's what I'm looking at. As always, again, guys, we'd absolutely love for you to join us here. HowToTradeToWin.com. Come be a member of what we do there. See why people continue to hang out with us. They stick around with us, and they don't just leave after the first month. Again, what you're going to find out when you join us is that most of the people there have been there, like I said, for at least 6 months. Many of them for 2 to 3 years. And then, even the new people basically have been in here recently now, last 2 or 3 months now. We've been in there. So we do what we do, guys. Remember, we've got over 30 hours of live education, or 30 hours of educational content there, including about an hour every week of live educational stuff that we do with you. We've got over 50 plus setups that we do every week between our hot takes and chart requests and everything else. But just the hot takes alone almost gets up there. And man, we've been really stupid successful with those. And just so much going on there. So come on and join us. We'd love to have you there. Other than that, I hope you guys have a fantastic weekend. Thank you so much for spending some time with me today. And hopefully, again, we'll see you over there. But remember, guys, in the markets, no matter how good it looks, no matter how good, remind yourself that there are no guarantees. All right? Risk management continues to be the most important thing that you're ever going to do as traders. So get it done. All right, guys? Y'all take care. Have a great weekend. We'll be back on Monday at 11 a.m. Central Standard Time for a 45-minute hour show there, looking at some Bitcoin and DXY, talking to y'all some more. So take care there, guys. All right?